Hi, I'm Alexandra Mousavizadeh, founder and CEO of Evident. I have 20 years of experience running intelligence teams focused on ratings and indices. Evident is a research company specializing in the measurement of AI adoption for banks, and over the years to come, we will be covering other sectors as well. The Evident AI Index is the first measurement of AI adoption for banks and has become the reference point for AI adoption for banks, setting out the standard way to measure and track AI adoption. So the AI Index measures the full AI ecosystem of a bank. We do a 360 measuring all of the activity on AI in a bank by bank. We mine millions of data points that flow into 150 indicators that fall into four buckets. We look at talent, we look at innovation, we look at leadership, and we look at responsible AI. So currently we measure 23 banks, the biggest banks in North America and Europe. But in our second edition that is going to be released on November 15, we're doubling the coverage and we're going to be covering 50 banks in North America and Europe, going deeper into these regions. And the edition after that, we will be looking at outcomes and return on investment. The interesting thing that we found since the release of the index in January is the growing clarity on the correlation between AI maturity and financial performance. So we can see now that the banks that are ranking high on the index on AI maturity has a clear link to financial performance. But we'll be tracking this in a lot of detail in the years to come. So the characteristics of the banks that are furthest along in their AI adoption, typically we see that they have a very strong talent stack, i.e. the talent that they have that relates to AI. We look at 240 role titles. It falls into roughly 9 different types of AI talent buckets. But overall, the banks that are doing well in the index tend to have a very strong talent stack and very strong leadership. And actually, talent is a way that the banks express their leadership in AI. The top banks have been going for 5, 6, sometimes 7 years, being very clear about the bank focusing on AI as it's one of its key objectives and strategies. And from that follows a strategy on talent acquisition, on reorganizing the operating model, on creating an innovation environment that is both centralized and decentralized. So those are the characteristics that we see of the top performing banks. What Gen AI has done, interestingly, is really expose the banks that don't have a proper decision-making process. With all of the use cases that are surfacing from AI itself, but also now Gen AI, there are hundreds, and in many of the big banks, thousands of use cases that are being under consideration. So you have to have a centralized decision-making unit that can look at complexity, that can look at the value of the use case, that can look at time to production and make a decision on what they need to prioritize and which of the use cases that are going to be selected first. So the leading bank, the characteristic of the leading bank is that they have really strong talent stack, very clear strategy, and very clear about what they expect to get in terms of return on investment of the investment that they've made into AI. Very few of the banks actually express a return on investment, but there's a doubling down on how to measure this. And this is very important. We expect that in the next year, more and more banks are going to express the actual figure, which for the leading bank is 1.5 billion, and others to follow suit in expressing an actual number on the return on investment annually for what they put in AI to solve their use cases that year. The characteristic of the leading bank is that it has very strong talent stack and very clear AI strategy that it's put in place 5, 6 years ago. In addition, very clear that expressing the return on investment from AI of 1.5 billion this year alone. So one thing we've discovered out of the data of the index is there's definitely a war on talent. There's a small talent pool. If you think about we've measured that it's roughly 46,000 people in the AI talent pool, and all of the banks are fighting for the same talent. So what we are seeing is that the banks that have really good hiring strategies, but dedicated AI hiring teams, and make the environment for AI talent conducive, i.e., allowing publications of research, submitting papers to conferences, being able to perform and share knowledge on open source platforms like GitHub and Stack Overflow and Kaggle are really meaningful for AI talent, and they look for that when they're looking at what banks to join. They've got lots of other options. They can go to big tech, they can go to consultancies, and they can go to other industries that also pay a lot. So there is definitely a war on the AI talent that there is, and that's being fought out among the banks. So what we're seeing that in spite of the hiring freezes in the banking sector, they're not freezing on hiring AI talent. We're seeing this growing even from the banks with very specific hiring freezes, and that they're yet still putting job descriptions out and have lots of openings for AI talent. We're seeing a shift in where the AI talent is coming from, which is really interesting. A lot, of course, is intra-bank, but there's a growing number of the AI talent that comes from IT consultancies and big tech. What we're really seeing is that the most rapid growth of where AI talent is coming from in the banks is from academia and big tech, and particularly academia. Though in terms of the war on talent, where we see this really being fought out is the poaching by the banks from their peers. And we see this talent being flowed between the American banks in the US, American banks in Europe that are taking AI talent from the European banks. What we see is that it's the top talent, people who have run a center of excellence, a research lab. That oversight is really rare, and having that ability to identify what research you need to put in motion that would be relevant for the bank down the line. So some of the leading banks did a lot of synthetic data research 3-4 years ago. And today it's absolutely essential to move quickly on credit and loans and mortgages and so on. Synthetic data is essential. So whoever put that research in motion, those banks will have a significant advantage when it comes to developing product and actually saving a lot of money in their loan and credit and mortgage lines. So the poaching is, well, we can see sort of heads of centers of excellence or heads of AI labs and so on that move from bank to bank. And then it is AI developers, particularly. Now with Gen AI, it's a slightly different mood out there because there is suddenly a pause on what kind of AI talent do we actually need going forward. There's definitely a focus on prompt engineers. We've mapped the job openings from January till today, and there was no movement in the first 4 months. And then suddenly now we've seen over the summer a rapid increase in the demand for prompt engineers and AI engineers, people who can understand large language models, knows how they need to fit into the lines of business and what they need to do, but they don't need to be able to develop large language models. They just need to be able to interrogate them and set them up so they're getting the most out of those investments they're making in large language models. The other thing that we're seeing is a huge pause in the banks in terms of watching the costs. If you are looking at using generative AI and you are buying Chat GPT-4, that's really expensive. I mean, you go bankrupt if you're trying to solve your use cases with Chat GPT-4. So all the banks are looking at what are my alternatives? What are the cheaper tools? How can I get something that's cheaper and I can sort of make it fit for purpose and so on? The top areas of use of generative AI are in three buckets. They are in efficiency gains, so in the operations of a bank. They're with anything to do that would lift information into the hands of people servicing their customers and can do that at speed, and being able to write code and produce code much faster and cleaner. That's where generative AI is incredibly useful. So what's coming up in the next couple of months is that we will be releasing our second edition of the Evident AI Index, going from 25 banks to 50 banks. That will be released on November 15. And following that, we're hosting a big AI symposium on November 29 in New York with CIOs, CEOs of the banks, CTOs, and a lot of conversation about where AI is on the horizon, a little bit of quantum, but otherwise, how banks are organizing build versus buy. What does it mean to be an AI first bank? What kind of operating structure do you need? How do we measure return on investment? And what are the geopolitics of AI? And we're also going to be looking at the regulation that's coming down the pike on and how that will affect the financial services sector.